Saving money and investing it wisely is crucial for building wealth and achieving financial success. It's not just about earning more money, but also about managing it effectively. One of the best ways to start building wealth is by saving money. There are many ways to save money, and it starts with creating a budget. A budget helps you understand where your money is going and where you can cut back on expenses. By reducing unnecessary expenses, you can free up more money to invest in your future. Another way to save money is by automating your savings. This means setting up automatic transfers from your checking account to your savings account every month. By automating your savings, you remove the temptation to spend that money elsewhere. Investing your savings is also important for building wealth over time. There are different investment options, such as stocks, bonds, and real estate. Each option has its own benefits and risks. Stocks are a popular investment option because they offer the potential for high returns. However, they also come with higher risks. Bonds, on the other hand, are generally considered a safer investment option because they offer a fixed return. Real estate is another investment option that can provide both cash flow and appreciation. However, it requires a significant amount of capital to get started. In conclusion, starting your purse to fattening by saving money and investing it wisely is a crucial step in achieving financial success. By creating a budget, reducing expenses, automating savings, and investing in different options, you can build wealth over time. Key takeaway number 2, control thy expenditures. One of the most critical principles for achieving financial success is living within your means. If you spend more than you earn, you will never be able to build wealth. This is why it's crucial to prioritize your expenses and ensure that you save enough to invest in your future. So how can you control your spending and start building wealth? Let's explore some tips. First, start by tracking your expenses. Keep a record of every dollar you spend and categorize your expenses to see where your money is going. This will help you identify areas where you can cut back and save more money. Another tip is to avoid impulse purchases. Before you buy something, take a moment to consider whether it's something you really need or just something you want. Impulse purchases can quickly add up and derail your financial goals. Additionally, negotiate better deals whenever possible. Whether it's negotiating a lower price on a car or getting a better deal on your cable bill, every dollar you save can be put towards building your wealth. In summary, controlling your expenditures is a critical component of achieving financial success. By living within your means, tracking your expenses, avoiding impulse purchases, and negotiating better deals, you can save more money and invest in your future. Key takeaway number 3, make thy gold multiply. Investing is a crucial step in building long-term wealth, and it's important to understand how to do it wisely. The Richest Man in Babylon emphasizes the importance of investing in assets that appreciate in value and generate passive income, such as stocks, bonds, and real estate. When it comes to investing in stocks, it's important to do your research and invest in companies with a solid track record and a strong future outlook. Investing in individual stocks can be risky, so it's often a good idea to invest in a diversified portfolio of stocks through a mutual fund or exchange-traded fund (ETF). Bonds are another investment option that can provide a stable source of income. They are essentially loans that investors make to companies or governments, and they typically provide a fixed rate of return over a set period of time. Real estate is another popular investment option that can provide both appreciation and passive income. Investing in rental properties or real estate investment trusts, REITs, can provide a steady stream of rental income and long-term appreciation. Of course, all investments come with risks, and it's important to understand the potential downsides as well. Stocks can be volatile and unpredictable, bonds can be impacted by interest rate changes, and real estate can be impacted by market fluctuations and changes in rental demand. However, with proper research and a diversified portfolio, the rewards can be significant. There are also alternative investment options, such as peer-to-peer lending and cryptocurrency, which can provide high potential returns but also come with higher risk. Success stories of people who invested wisely and grew their wealth over time are plentiful. From Warren Buffett to Peter Lynch, there are many investors who have made fortunes through smart investment strategies. However, it's important to note that investing is not a get-rich-quick scheme and requires patience and discipline. In conclusion, investing is a critical part of building long-term wealth, and it's important to understand the different options available and the risks and rewards associated with each. By investing wisely and diversifying your portfolio, you can make your gold multiply and achieve financial success. Key takeaway number 4, guard thy treasures from loss. Protecting your wealth is just as important as building it. One way to do this is by diversifying your investments to minimize risk. You should never put all of your eggs in one basket. Instead, consider investing in different types of assets, such as stocks, bonds, and real estate. By diversifying, you can spread your risk and potentially earn higher returns over time. However, investing always involves some level of risk, and it's important to understand and manage those risks. Some common investment risks include market volatility and fraud. Market volatility refers to the ups and downs of the stock market, which can lead to fluctuations in the value of your investments. While it's impossible to completely avoid market volatility, you can mitigate the risk by diversifying your portfolio and avoiding emotional decisions based on short-term market movements. Fraud is another common risk in the investment world. Scammers and Ponzi schemes can trick investors into handing over their money, resulting in devastating losses. To avoid fraud, always do your due diligence before investing. Research the company or investment opportunity thoroughly and be wary of any promises of quick or guaranteed returns. It's also important to learn from the mistakes of others. There are countless examples of people who lost their wealth due to poor investment choices. For example, some people invested all of their money in a single stock or real estate venture without properly assessing the risks involved. Others fell victim to scams or frauds. By studying these examples and understanding how they could have prevented their losses, you can become a more informed and successful investor. In summary, guarding your treasures from loss involves diversifying your investments, understanding and managing risks, and learning from the mistakes of others. By taking these steps, you can protect your wealth and increase your chances of achieving long-term financial success. Key takeaway number 5: increase the ability to earn. As you work to improve your financial health, it's important to not only focus on saving and investing but also on increasing your earning potential. In this key takeaway, we will discuss the importance of investing in yourself and share examples of how to do so effectively. Investing in your own education and career development can lead to a higher income and better job opportunities. When you have more skills and knowledge, you become more valuable to employers and can negotiate for higher salaries or better benefits. Additionally, improving your skills and knowledge can lead to career advancement, which may offer additional financial benefits. There are many ways to invest in yourself and improve your earning potential. One way is to take courses or obtain certifications that can help you develop new skills or expand your existing knowledge base. Another way is to network with people in your industry or seek out mentorship opportunities, which can offer valuable insights and connections. You can also consider attending conferences or joining professional organizations to stay up to date on industry trends and make new connections. There are many examples of people who have invested in themselves and achieved financial success. For instance, Elon Musk, the founder of SpaceX and Tesla, is known for his deep knowledge of engineering and his constant drive to learn and innovate. This dedication to self-improvement has helped him become one of the most successful entrepreneurs of our time. Another example is Oprah Winfrey, who invested in her own education and career development to become one of the most influential media personalities in history. Through hard work, perseverance, and a focus on self-improvement, she built a media empire that made her one of the wealthiest women in the world. Investing in yourself is one of the most important steps you can take to improve your financial standing. By improving your skills and knowledge, you can increase your earning potential and create new opportunities for yourself. By taking the time to invest in yourself, you are setting yourself up for long-term financial success. So, we've covered the 5 key takeaways from The Richest Man in Babylon book, and each one is important in achieving financial success. Each of these takeaways is crucial in achieving financial success, and applying these principles to your own life can help you achieve your financial goals. We highly encourage you to read The Richest Man in Babylon book for more detailed insights and guidance on how to apply these principles in your life. And if you're looking for additional resources or recommendations for further learning, there are many great personal finance blogs, podcasts, and books available to help you continue your financial education and journey towards financial freedom. Remember, building wealth and achieving financial success takes time, discipline, and patience. But with the right mindset and a commitment to these key takeaways, you can achieve your financial goals and live the life you've always dreamed of.